Welcome to the Overberg Asset Management Market Review. In this episode, Nick and Gielie shares with us the highlights of the markets, both globally and in South Africa.
Good day and welcome. I am Nick. The markets seem to have behaved themselves. It's normally the opposite. Whenever I go on holiday, they tend to tank. But this time they've done the opposite. So maybe I should go on holiday more often. But the markets have gone up. However, before we get too excited, most of the gains have been very concentrated in the sort of mega cap US tech stocks amid a frenzy of AI, artificial intelligence, euphoria. So those shares have been running very hard. And because they've got such a big weighting in the index, the standard index we look at every day is the market capitalization index. So it doesn't look at the number of shares in the index. It just looks at how big those shares are, the weighting in the index. And if instead we look at the equal weighted index as opposed to the market weighted or the capitalization weighted index, it's a very different story. Most other shares haven't actually participated in this huge rally, but we're going to talk about that a bit later. We've got, as usual, very good research from a couple of the independent macro research companies that we follow, in particular Capital Economics, also MRB, which have called the markets absolutely brilliantly. And also the big threat, the elephant in the room, is inflation, and they've called that brilliantly as well. So I'm going to start off with the consumer price inflation. Headline CPI year on year fell sharply from the previous months. In May, it dropped to 4% from 4.9% the previous month. So that's a big decline. But don't get too excited. A lot of it is due to the very sharp drop in energy prices. So if we strip out energy and food and we get to the core figure, it's not as exciting. Core CPI fell year on year from 5.5% to 5.3%. Not such a big drop as you can see. And the month on month remained 0.4%, which is quite high, and has shown zero slowdown compared to the previous 2 months, March and April. And then core goods remain very high month on month at 0.6%. Core services also no change, 0.4%, the same as the previous 2 months. So there doesn't seem to be that much of a slowdown in inflation if you look underneath the hood. According to MRB, and they've called the inflation absolutely spot on, but robust wage growth portends a persistently elevated inflation rate for non-housing core services, which comprise more than half of the core inflation basket. And it's that segment that the Fed is particularly keen on and watching very closely. Sequential wage growth remains extremely high relative to its pre-pandemic rate and portends continued upward pressure on non-housing services inflation. Based on the recent trends of wage growth, core PCE inflation looks more likely to move into a 3 to 4% range in the medium term rather than 2% as targeted by the Federal Reserve. So I think we ought to take very close attention to what MRB are saying. They've been right all along. What are the implications for the Federal Reserve? Well, on the 14th of June, they had a policy meeting. The Fed kept its Fed funds rate, the key policy rate, unchanged at 5.25%, or a range actually of 5 to 5.25%. However, Fed communications maintained a hawkish tone, underlying that policy the policy pause was not the end of the tightening cycle. Since it's so encouraging for the Far East, let's close off now on Vietnam. And whilst Europe, the UK, the US are all continuing to tighten policy and rattle their sabers in their policy meetings, it's encouraging to see that at the policy meeting on the 16th of June, the Vietnamese central bank cut its benchmark interest rate by 50 basis points to 4.5%. So it's a cumulative rate cut so far of 150 basis points. And that's since April. So between April and the 16th of June, the Central Bank of Vietnam have cut their benchmark rate by 150 basis points. We should be very excited about that. So almost entirely reverses the 200 basis points of hikes that occurred in the rate hiking cycle last year. So the policy statement says that the rate cut was to support the recovery of economic growth. And yet their economic growth in the first quarter was 3.3% year on year, not too bad at all. Let's have a look at the inflation rate. Inflation there has dropped back sharply in recent months. The year-on-year rate falling in May to just 2.4%, well below the target, the central bank target of 3%. So there's a good chance that the rate will drop even further. That's to say, the interest rate from 4.5% currently maybe to 3.5% by the end of the year, according to some economists. So that's all from my side, Gielie. All good on the local markets.
Thanks for a very comprehensive macro overview, and especially about the news about inflation. Locally, it's a quiet season. A few announcements came up. Prosus and Naspers, we hold those two shares. They announced that the headline earnings per share will drop for the year to the end of March by between 21% and 31%. There are two reasons for this drop. Firstly, regulatory crackdowns, and secondly, China's COVID-0 policy had an effect on sales, but sales rebounded since January after the country reopened. The announcement had little effect on the share price. Both shares are actually up 65% over the last year. Transaction Capital, they've got a finance division called GOMO, and GOMO announced that it has reached an agreement with a leading South African bank in terms of which GOMO will become an originator of loans for the bank and earning a portion of the fees. They refer to a leading South African bank. We do not yet know which bank it's going to be. It had little effect on the share price. Glencore, we own Glencore. Glencore alerted us at the beginning of the year that this will be a year of mergers and acquisitions, and they are very active with mergers and acquisitions. Last week, they sold the interest that they've got in an Australian copper mine for $775 million, but at the same time, they bought another copper mine. So it's in and out of copper mines. And it's really a good time to buy mines now because the commodity prices are low. Foreign net selling of local shares, it's really picking up sharply. It was just 30 billion a few weeks ago, and yesterday it was 61 billion rand year to date. This year to date is in June, so we can expect that for the rest of the year it could easily double from 61 billion to more than 100 billion. and then statistics. Firstly, the SACI, as they call it, Business Confidence Index. SACI stands for the SA Chamber of Commerce and Industry. The index came down from 107.1 points. This is measured in points, from 107 points to 106.9 points. It's just a little drop of 0.2 points. But what is worrying is that this index keeps on falling. And the reason for this is load shedding. Retail sales came out. Retail sales for April, year on year. This is a percentage. It was in the previous month, in March, it was minus 1.5. And it's now in April, minus 1.6. So it actually dropped. Although it's in negative territory, it dropped 0.1%. And this marks the 5th consecutive month of drops in the retail sales. What is concerning is that the graph is already in negative territory, and this ups and downs that they've got is just taking place in the negative territory. It's nothing to get excited about. The leading business indicator came out. It was in April, it was minus 2.2%, and it improved, if you can say that, to minus 1%. So it's a bit of an improvement, but everything in negative territory. This graph has also been in negative territory for the last 5 months. So again, the ups and downs are all taking place in negative territory. And we must remember that this leading indicator is looking forward. It's looking forward about 6 months.